Are you life insurance licensed, but have yet to sell a fixed annuity? Are you looking for the Cliff Notes version and how to position a fixed annuity to your customers? Then stick around, because in the next few minutes, I will be sharing with you what a fixed annuity is, as well as an easy way for you to start selling fixed annuities in no time. Welcome back to Advancing Insurance Professionals channel, where we teach insurance professionals how to skyrocket their growth and success in the new workplace. Not only is a fixed annuity a great way for you to help your prospects and clients diversify their portfolio, especially with everything going on in the market right now, but this could be a very profitable additional line of business and revenue for your agency. Let's begin today with a little history on what a fixed annuity actually is. Fixed annuities go back to the Roman Empire days, but they really picked up a lot of popularity during the Great Depression. The reason is that while so many financial institutions completely collapsed and so many people lost their money, fixed annuities were the only financial vehicle that remained strong and standing. In fact, Babe Ruth, who was a famous baseball player, had a fixed annuity. And during the Great Depression, while most people lost all their money, he continued to receive these payments. Today, many sports figures, attorneys, doctors, and celebrities continue to use annuities as a way to diversify their portfolio and keep their money safe. I personally first fell in love with fixed annuities right when I got into the financial service industry as the crash of '01 was happening all around. Not only did I finish top of my company as the #1 annuity producer, but annuities are the reason why I was able to qualify for MDRT so many years in a row. There are so many benefits to a fixed annuity, but today I'm going to share with you an acronym to make it super simple for you to remember all the benefits that you can share with your prospects and clients. In fact, this is the very acronym that I used when I was a wholesaler working for Jackson National Life and representing both fixed and indexed annuities. This acronym is exactly what I use to share with my students to get them started on their annuity journey. The easiest way to remember everything you need to know about a fixed annuity is simple. Annuities have style, safety, tax deferral, yield, liquidity, and estate planning benefits. Let's dive into each one, and I will explain to you how to explain this to your customer. S is for safety, and fixed annuities, this is their biggest benefit. All fixed annuities have a guaranteed interest rate. So no matter what happens in the stock market, your customer can rest assured they're going to continue earning that fixed interest rate. Because life insurance companies offer fixed annuities, state law and the financial strength of the insurance company that you're buying from protect your customers' hard-earned money. The insurance companies that issue these fixed annuities have legal reserves that they must keep. These insurance companies that offer annuities are constantly scrutinized by third company organizations and rated by trusted organizations, such as Standard & Poor, Moody's, and industry's leading rating service. And in many states, annuities are further protected from creditors. The T is for tax deferral. Can you say compound interest? With tax deferral, you don't have to pay taxes on any earned interest until you actually pull the cash out and start using it. This lets your savings grow in 3 different ways: interest on your principal, interest on the money that you would have sent to the government to pay your taxes, and the interest on your accumulated interest. Although you will pay taxes on your earned interest eventually, or if you pass it on to your children, they will pay taxes on the earned income. In the meanwhile, you will build up a substantially larger nest egg from all these compounding features. Y is for yield. And another added benefit of annuities is they consistently outperform savings vehicles and CDs. For example, when I first started selling annuities in 2001, it was right when interest rates started to drop. At that time, I had a fixed annuity that was paying 8% the first year, 5% renewal rate with a floor of 3%. What this means is that for every single one of my clients that I put into this fixed annuity, for the next 7 years, their money was protected while CD rates went way below 1%. These clients were able to at least make a minimum of 3% every year going forward, as well as the 8% and the 5% that they made those first 2 years. While so many of our bank clients were scrambling and trying to make 1% in a CD, my annuity customers were enjoying a 3% floor. L is for liquidity, and this is another huge benefit of annuities, as annuities do offer liquidity features. Many companies allow for you to take out 5 to 10% every single year, making this a great way to create an income stream for your baby boomers. In addition, some companies even offer this cumulative. So if you didn't take out 10% your first year, you can go ahead and pull out 20% your second year. And in many states, annuities also offer living features. So for example, if you have to go into a nursing facility or you can't perform 2 out of 6 activities, such as driving yourself or feeding yourself, the money becomes 100% liquid. Now, I will add that a fixed annuity is a long-term play. So you really want to position this as a long-term strategy for your customer and make sure they only put money in there that they don't plan on using. However, if they have an emergency, you got them covered. Last but certainly not least is estate planning advantages. Annuities work just like a trust, meaning that they bypass probate. So if you have a client that has yet to get a trust and they want the same protection, they can put their money in a fixed annuity and be protected even in death. Annuities are actually one of the best ways to pass on money and have your clients be able to leave a legacy for their children, because it is the fastest way to pass money. Most insurance companies, upon receiving a death certificate, will issue the funds directly to the beneficiary within 7 to 10 business days. Although all of these benefits are worth mentioning when you're educating your customers on how fixed annuities work, I will add that your customers are not going to all have the same needs, and all of those benefits are going to be top priority for them. For example, for a lot of your clients, safety and liquidity are going to be their 2 main priorities. And so you want to make sure to properly spend enough time on those and perhaps share some stories of other customers who had the same concern and how you were able to help them with a fixed annuity. Now, if you're still watching, I want to give you an added bonus. I'm going to share with you one of the reasons why I was able to sell so many annuities and so many investment products and insurance products as a whole. When you have your clients sit down, the very first thing you want to share with them when you're about to go over an annuity is to let them know that they're not going to be opening an annuity today. They're not going to be signing up for anything today. Today is for informational purposes only. The reason is that as human beings, we do not like to be sold. We like to be educated and we like to buy, but we do not like to be sold. And so I found that really by letting the customer know that nothing needs to be done today, it allowed them to have an open mind, relax, and I was able to connect with them much deeper. This is how relationships are built. Not by trying to go super fast and get your clients to sign something that they're then going to have buyer's remorse. I always had my clients go home, read over all the material, sleep on it, and come back with their questions and concerns. So that way, when they signed the application, it was already 100% of their decision and not one that I persuaded them to make. I believe we're going to see a lot more interest in fixed annuities as interest rates start going up, along with the market volatility that we're seeing today. As an insurance professional, what better way to protect your customer than to protect their hard-earned money? Now, what I would recommend is take this acronym, STYLE, and go over it a few times. So that way, when you're sitting in front of your prospect or customer, you can feel confident in what direction you want to go. Thank you all so much. I hope you enjoyed this video. If you have any questions, please drop it in the comments below. And if you found value, please make sure to subscribe, give us a thumbs up, and hit that bell so you never have to miss another tip on how to grow your agency in the modern workplace.